Did you know that ESG investing has outperformed traditional investing strategies in recent years? ESG investing is an approach that integrates environmental, social, and governance factors into investment practices. This strategy allows investors to support companies that prioritize sustainability, ethical business practices, and social responsibility. By focusing on socially responsible investing, ESG investors can make a positive impact on the world while potentially earning a return on their investment. Practical examples of ESG investing include investing in companies that have strong diversity and inclusion policies, prioritize renewable energy sources, or have transparent governance structures. ESG investing has gained momentum in recent years due to the pressing challenges faced by society. Climate change, social inequality, and corporate scandals have highlighted the need for a more sustainable approach to investing. When it comes to ESG investing, companies are evaluated based on their environmental impact, social responsibility, and governance practices. By considering these factors, investors can not only drive positive change, but also potentially achieve strong financial returns. One of the key moments in ESG investing is witnessing the success stories of companies that have embraced these principles. Companies that prioritize ESG factors have seen tangible benefits, both in terms of their business performance and their contribution to a better world. The rise of ESG investing has become increasingly important in today's market, as more investors are recognizing the significance of incorporating environmental, social, and governance factors into their investment strategies. ESG investing, also known as socially responsible investing or impact investing, involves analyzing companies based on their ESG criteria, such as carbon emissions, corporate governance, social impact, and sustainability. Many ESG investors believe that companies with high ESG scores tend to outperform those with lower scores. Investors can choose from ESG funds, mutual funds, ETFs, exchange-traded funds, or traditional funds that focus on ESG stocks and companies with strong ESG practices. By using ESG metrics and ESG research from research firms like Morningstar and MSCI, individuals can align their investment choices with their ethical values and financial goals. ESG investing involves considering a variety of factors beyond just financial return when selecting investments. These ESG factors can include environmental, social, and governance criteria, such as a company's ESG rating or its corporate social responsibility initiatives. Investors may also look at how a company manages its supply chain or its privacy policy in order to make more responsible investment decisions. ESG integration aims to incorporate these aspects into the investment process to evaluate both risks and opportunities associated with ESG performance. ESG reporting is becoming increasingly important as investors seek to understand the impact investing of their portfolios. Many institutional investors use ESG approaches to assess the financial performance of companies they invest in. Companies that offer ESG objectives and demonstrate a commitment to ESG and sustainability are often included in ESG index funds like the Dow Jones Sustainability Index. Through research on ESG and ESG investing strategies, investors can align their values with their investments and drive positive change. ESG investing focuses on the use of environmental, social, and governance factors to evaluate potential investments in companies. The financial benefits of investing in ESG-conscious companies are becoming more evident to shareholders and investors. According to case studies and information provided in annual reports, companies that prioritize social or environmental issues tend to outperform those that do not. This is where ESG investment, or socially responsible investing, comes into play, allowing individuals to make ethical investing decisions while also benefiting financially. Furthermore, ESG investing may involve impact investing, which goes beyond traditional equity analysis to assess the environmental and social impact of investments in companies. By looking at various ESG criteria, such as those provided by MSCI ESG or the Global Reporting Initiative, investors can determine which companies offer the best opportunities for both financial progress and challenges. This investment research can be particularly useful for robo-advisors or advisory or brokerage services that help individuals buy or sell particular stocks based on ESG criteria. ESG stands for environmental, social, and governance factors, which are becoming increasingly important in the world of investing. Socially responsible investing and impact investing are two ways in which the use of ESG criteria can lead to a more sustainable future for our planet. By analyzing the environmental and social practices of companies to invest in, investors can help drive positive change in the world. For example, the creation of the Task Force on Climate-Related Financial Disclosures in the U.S. has encouraged companies to be more transparent about their environmental practices. ESG investing offers a win-win scenario. Investors can potentially enjoy financial gains while also making a positive impact on society and the environment. It's a sustainable approach that aligns profit with purpose. Social factors play a significant role in socially responsible investing, as investors are increasingly taking into consideration the environmental, social, and governance practices of the companies they choose to invest in. These factors can include diversity, labor practices, human rights, and community involvement. By aligning their investments with their values, investors are pushing for positive change and holding companies accountable for their actions. This shift towards socially responsible investing is driving companies to be more transparent and ethical in their business practices. Socially responsible investing is a growing trend among investors who want to make a positive impact while earning returns. One successful example is investing in companies with strong diversity and inclusion policies, which can lead to higher employee engagement and productivity. Another strategy is to focus on renewable energy projects, which not only benefit the environment, but also have the potential for strong financial returns. By prioritizing environmental, social, and governance considerations, investors can align their values with their financial goals. Delve deeper into ESG investing by exploring more videos on sustainable investing or by sharing your thoughts on ESG in the comments section. Join the conversation and expand your knowledge on the impact of ESG in the world of finance. Together, we can drive positive change through responsible investing.